Good day, Market Chameleons, and everyone joining us for the first time. Thanks for coming by and checking out the Market Chameleon webinar series. Before we get started, let's take a look at the share disclaimer. And please be aware that neither Market Chameleon, Dimitri, or myself are registered investment advisors or a broker-dealer. If you're searching for investment advice, please reach out to a licensed professional. This webinar, as all our webinars and shows, are for informational purposes only concerning Market Chameleon tools and products. With that, let's welcome Dimitri Pargamonic to the stage, who will be talking about pre-market SPX options trading. How you doing, D?
Good morning, Will. How are you?
Good.
Yeah, so let's share my screen here. Start from the home page. And what we're going to do is quickly look at SPX
Hey,
options
D, just
trade.
so you know, your screen isn't up for some reason. There's no way.
Okay. Sorry. You're right. How's that?
There it is.
Okay.
Perfect.
So we'll go to the SPX, which is the S&P 500 index. That has listed options. These are options that are European, and they do trade outside regular trading hours. So there's pre-market options trading and even after hours options trading in the SPX index. So what we'll do is first navigate to SPX. And we're going to land on the SPX option chain. So SPX itself, it's an index. It's not like it's basically a calculation, right? It's not traded like an ETF. It's a calculation that's broadcast. The S&P 500, CBOE, I believe, broadcasted, and then the options trade around that index calculation. And when we look at the options, you could see that right now we're still in pre-market. We didn't open yet, and there are already 58,000 contracts traded in pre-market hours in SPX. If we scroll down here, you could see these. We could go back in time and bring up a snapshot. So even from last night, starting at 8:15 p.m., you could see it traded all the way through, and now we're at 8:45 a.m. So these are all the trades. They call them, I believe they call these global hours, which include trades, from the previous nights. You can see it traded throughout the night, all the way in the morning. So you have almost 24 hours trading in the SPX options, which gives traders the ability to trade on news and information that's outside regular trading hours, and you have access to these options to be able to trade and react to that news. So when at least for today's demonstration, we're just going to go to try to quickly get a summary of what's going on here. There are lots of trades going on. You could see here these volumes, lots of different strikes, calls, puts, different expirations. So to get quicker insights, what's going on, where is the trading interest concentrated? Are there any, big trades that stand out, that are unique, that we could spot? How's the volume distributed? So by looking at the options chain alone, that would be hard. You'd have to go through and kind of figure this out, and we have some reports we created that help you look into those insights. So these two reports, one is looking at the multi-leg trades and one is looking at single leg trades. Multi-leg trades are those trades that are entered in as spreads, like call spread, put spread, calendar spread, butterfly. Single leg trades, those are just orders that are, buy or sell, call or put. So let's first take a look at the single leg dashboard. If we click on it, we come to this page. And for now, I'm just going to hit close this menu to minimize it, expand our screen. And we could see that out of all the, there's 59,000 contracts traded today, 37,000 of them were single leg option trades. These are the breakdowns, percent calls and puts, the interpretation of options bought or sold. But to kind of go a little bit quicker today, we'll just go to some of these main insights, the main boxes. So here are the top 5 most active options. You can see they're all on September 30th expiration, mix of calls and puts. The strike, looks like the strike prices are all around the 60, well, between 6,600 to 6,690, right? Which is, like around where the spot index is trading. And these are the different volumes for each of these strikes, for each of these options, and the VWAP, volume weighted average price. So the top 5 most active options are all in the expiring options, the options expiring today, right? These are the 0 DTE options that are the most active from all the options. But we could see here that they're fairly distributed. One doesn't stick out as much higher than the other ones. They're all 2,000, and they kind of taper off a little bit. And that is cumulative volume. So that's the most active cumulative single leg option volume. It's not a single trade. It's more, as the more and more trading, that volume is accumulating. So let's look at certain trades that may stick out, bigger trades. So I'm going to slide down here. These are the notable trades. So these are, looking that we detected an order came in and was a bigger trade, right? The difference here is that this 2,400 could be many, trades throughout the day, 1 lot, 2 lots, 10 lots, 100 lots all accumulated. This is, just notable trades. So in this situation, we see a mix of November 21st expiration, October 3rd expiration, October 31st expiration. All of them were in puts. So the biggest trades were in puts. These were the volume amounts. These were the VWAP prices. And our interpretation if the incoming order, initiating order, was a buy or sell or bought or sold. So in this situation, you can see the top 2 are actually the same option, right? There's a trade, 220 contracts that we interpreted that was a bought for $51, and then the same contract, 210 contracts, are sold for 51.5. Here we have different options than October 64.90 put, 200 contracts for VWAP price of 370. These are our interpretations of bought or sold. So this gives you some idea of where there are bigger trades, where were the contracts, where those bigger trades targeting, the prices, the volume in them, and our interpretation of bought or sold. Another one we could look at is the volume by delta. This is the distribution of volume based on the delta of the options. So the delta of the options are closer to like around 50. So those would be at the money, right? So here we can see that the money's calls, 16% of the volume were around that the money calls, 17% of the puts were around the at the money. Wings made up a bigger percentage of it. So the wings would be something that's out of the money, like a call that is around a 25 delta. So that call option, the stock would have to increase to go to get to that strike in the call. For put, the stock would have to decrease a certain amount to get to that strike, but that those options still have some delta and they're sensitive to price movements, not as sensitive at the money, but still have some sensitivity. So these represent 21% of the puts in the wings and 19% of the option volume were in the call wings. Tails, these are options that are less than 10 delta, where the stock would have to make a more significant move to reach those strikes based on the volatility of SPX. So it would be less, the probability of are much lower in these tails. Usually, you would need some kind of outside move, outsized moves, like like a shock move in the index to reach those strikes. Something less, currently unexpected, that would make them the index move to those strikes. So 16% of the volume were in the puts, 10% in the calls in those wings. Okay, so now we got to kind of look at an idea how people are trading and using single leg options. So it's a quick way to look at it, in those pre-market trading activities. Another thing we could look at is, well, what about the spreads or the multi-leg trades? So if we open this menu again, I'm going to click on it. It opens it up. Let's look at the multi-leg trades. We'll go to this report. And this, I'm going to close this menu to minimize it. And now we see the multi-leg trades organized. And here on the top one, the one with the most contracts, 1,500 contracts, is a put spread that expires today. The 65.40, 65.65 put spread traded for 40 cents. The next one, 1,040 contracts, it also expires today, but this is the 65.20, 65.65 put spread. So you can see the strikes are a little bit different in this one. And this one also traded at 40 cents. So the idea here is that if we're looking at SPX options, we know that they have options available to trade outside regular trading hours, and we want to quickly see, well, how's that volume distributed? What are traders targeting? Where is their concentration? We could go use these reports to get those fast insights for our research. So, Will, I'm going to throw it back to you at this point.
Great job, Dee. Thanks for bringing another wonderful webinar to the Chameleon community. This is it's still a pretty new tool, right? Being able to see the SPX trades pre-market. Yep. It's really, really a great tool. Thanks for bringing it to the Chameleon community, my friend. You have a great day, and we will see you tomorrow, Dee.
Yep. Thanks, everyone. Stay safe out there. Have a great trading day, and we hope to see you tomorrow.
All right. Have a great day, Dee. Thanks. Bye. Hey, everyone. Thanks for joining the Market Chameleon webinar series. If you're following us on any of the social platforms, please thumbs up. Always appreciated. Follows are great. Comments are great. Everything is helpful to the Chameleon community. If you're here for the first time, remember you can go, if you're here for the first time, you wouldn't know, but go to the landing page. On the landing page, you will see the ability to, where is it? Right here, you can click on and start a free trial. You can get access to all the Market Chameleon tools for 7 days free. And let us know what you think. Everyone, thanks for joining again. Thumbs up if you're on YouTube. Everyone have a great, safe trading day, and we will see you tomorrow, 9 a.m.